Holy guacamole, Wish just reported earnings minutes ago and the stock went up like 15% and it is down again, but still up 3.92% since the market closed. So hello everyone, welcome back to the channel. Today we're finally going to talk about Wish, as I know that many of you were asking for an update on this stock, and I was waiting for exactly this to happen for them to report earnings. So if you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Now, as we can see here, the stock has been a complete roller coaster since they reported earnings. The stock first went up almost 16% and then down 9%, but still the stock is still down 3.73%. But we know that this stock has been crashing for the whole year as it is down 74.56%. But still, this is kind of a good recovery. It is up 14.12% right now. Now we know that the company is trading at $5.26 per share with a market cap of $3.19 billion. And obviously, as it is that cheap, it has a price to sales ratio of 1.09. I do have to say that the stock has been dropping massively, but I'm not a trader. I don't like to do technical analysis that much, but I try to look at it sometimes to see how the stock is doing in the short term, even though I'm investing it in the long term. And in my opinion, it needs to break this line right here in order to continue going up. And it hasn't yet, even with the latest uptrend today after they reported earnings. But now they announced several and very important things, just like they announced bold steps to improve product quality along with a greater focus on discovery commerce. Yesterday in the morning, they reported this as their Wish Standards program measures the performance of merchants in areas that matter to consumer the most. And I think that this is very important because we all know that one of the things that Wish struggles the most is with product quality. And they talked more about that in the earnings report, which we're gonna check later. But then they also announced that there's going to be a CEO transition. Piotr is stepping down as CEO. I'm sorry, but I'm not that good with names, and certainly this is not an easy name to say. But still, he is stepping down at the moment. It will continue being the CEO of the company until either a successor is appointed by the company's board of directors or no later than February 2022. And according to what I read, many of you like this a lot, as many didn't like how he is and how he talks on earnings call and all that. But we're gonna have to wait and see which that person is going to be. I know that this creates a lot of uncertainty for the company right now, but many seem to like this in the short term. Still, they also appointed a veteran finance executive for the CFO position. As you can remember that two quarters ago, the CFO stepped down. They had an interim CFO, but they were looking for a new CFO, and they now have Vivian Liu, which according to her LinkedIn, she has a lot of experience. She started in China Merchants Bank in 1996, the year that I was born, as a manager, then a manager in technical accounting in Deloitte, vice president of Goldman Sachs in 2007 for only 9 months, then manager valuation in Deloitte she worked in Cisco for 8 years as senior finance controller, then director of finance in the business unit and director of finance in sales, then vice president of finance in Huawei, chief CFO in Nextmark, CFO in Shutterfly, now member of Expensify, and now CFO of Wish. But let's go and check their earnings, as that is what we want to see the most. This is the pre-marks for the earnings call, even though it hasn't started yet. It is about to start in about 10 minutes. So let's see what they have to say in their earnings call, and then I will listen to the questions and answers at the end of the call. They first had to say that they took a few major steps this quarter to improve users' confidence in our platform, which is very important because I know that Wish struggles with the confidence from their customers, as many believe that there are a lot of scamming people in Wish. And they announced a new program for merchants called Wish Standards, which is designed to reward merchants that consistently provide an exceptional user experience, and they will provide highest performing merchants with priority placement, which I believe it is very important and very good for the company and the future of the company. Then they also increased their efforts to proactively prevent, detect, and remove misleading, fraudulent, poorly reviewed, and low-quality products listing in their platforms, as I said before, as that is one of their biggest problems at the moment. Secondly, they are making progress in reinventing their shopping experience to make it more engaging, entertaining, and easier for their users to purchase products they love, as they now came with live and video shopping, as now called Wish Clips, and now users are able to shop directly from high quality and trusted merchants created videos. They are currently testing this feature on Android devices in the US, and I want to see how this goes, as it kind of seem very appealing for users. Then, under the logistics side, they continue to focus on reducing delivery times, increasing on-time rates, and improving consistency by narrowing the delivery window users see at checkout. As another problem that they normally have is the delivery time that they offer to their clients, and many don't like that, as it tends to be a long period, weeks or even months, and if they want to compete with big e-commerce companies, they need to reduce those times, and they have been working really hard to improve that, which in my opinion is a very good sign. We can see that they reported a third quarter and they reported a revenue of $368 million, and I know it was a decrease of 39%, and many might ask that why, if it decreased 39%, the stock is up that much at the moment. But the thing is that analysts were expecting $353 million, because as I said in my Monday video, Wish management already said that they were expecting bad outcome for the next quarters, including this quarter. So any bad outcome was already priced in the stock. The thing is that if they were to report a worse than expected outcome, the stock would have crashed. But the thing is that they beat analyst expectations for their revenue. Still, they reported a net loss of $64 million, which is a decrease or an improvement from 2020. Now, they have made good progress in advancing Wish in a positive direction toward long-term growth and profitability, which I think it is very important, because you guys know that I always like to know what companies have planned to be profitable in the future. Now, they exceeded their bottom line guidance range in part due to more efficient and reduced digital advertising spend, which I know that many were wondering about that, as they used to spend a lot of money marketing, and we're gonna go and see that later with their income statement. Now, they launched Wish Standards, as I said before, launched Wish Clips, and expanded Wish payments option for US users by partnering with Klarna, a leader global retail bank payments and shopping service, to allow flexible payments option through its buy now, pay later offering. And we know how good that is for many e-commerce, just like Shopify, Amazon, and many more. Now, we can see here their balance sheet. Their cash and cash equivalents decreased from $1.9 billion to $1 billion, but still have total current assets of $1.3 billion and total assets of $1.3 billion, and total current liabilities decreased massively as well to $518 million. As you can see, it was a huge improvement for this company since December 2021. Maybe the CFO is making a really good job here. Now, they reported a revenue of $368 million. As I said, it was a decrease of 39%. And their total expenses decreased as well. As you can see, they decreased 48%, which is pretty nice, as the revenue decreased 39%, but expenses decreased way more. Now, something very important is that in 2020, their sales and marketing represented 63% of their revenue, while today, in 2021, represents only 39%. So this is what they said, that they started with a most efficient strategy in sales and marketing, and that also decreased that expense, and as you can see, it decreased a lot. Still, they reported a net loss of $64 million, which is a net loss per share of 10 cents, while analysts were expecting 15 cents. So they beat analysts' expectations in both revenue and earnings per share. Now, I do understand that the stock went up today, but it is now up only 78% at the moment I'm filming this video. I understand that they beat analysts' expectations in both revenue and earnings per share, and that they have improved a lot of things that investors were worrying about, like their quality products, like their logistics, and they now have a CFO and now have a plan to do a CEO transition. But still, we have a long path here with this company to profitability and to growth, as they mentioned last quarter that they will continue having bad outcomes in the coming quarters. Now, for the quarter 4 outcome, they did not provide any. They expect quarter 4 revenue to be below quarter 3 despite the holiday. So they will continue. They still expect to continue having bad outcomes in the coming quarters, as they are doing a transition in their company to be able to continue seeing a nice growth in the long term, get to profitability, and be able to be a huge e-commerce company as they plan to. So you guys need to understand that if you're investing in this company, it has to be in the long term. Yes, you can make a lot of money in the short term, as you can see that the stock is very, very what. In the long term, if they're able to fix all the things that they have been trying to improve in the last quarter, it could be a good potential company. Now, I'm investing in this company. You guys know that I'm losing money in this company. I'm completely honest with you guys. I'm not adding more to my position right now. Nothing wrong with it, but it is already a big position in my portfolio, and I don't like to invest that much in huge risk companies. I have a limit, and my limit which is right now, even though I'm very happy that they are improving and they are expecting good things for the future. Thank you, and see you next time.